Is it possible to turn $100 into $1,000 on trading? Many people dream of a quick acceleration of their deposit, but is it real or is it just a trap that will lead to a drain? Today, I'm going to break down the two best strategies for deposit acceleration, which can really help to increase your capital, even if you have only $100. The main thing is to follow the rules and act consciously. Before we move on to the strategies, let's understand what a deposit acceleration is. Acceleration in trading is a strategy of quickly increasing the initial capital in a short period of time. Unlike the classical approach, where the main goal is to preserve the deposit and stable growth, in acceleration, the trader consciously increases risks, counting on a series of successful trades. Before we begin, it is important to understand that there are no 100% winning trades in trading. Even the most proven strategies do not guarantee success, and deposit acceleration is always an increased risk. This video is not a financial recommendation, but it is only educational in nature. You can test everything I show you on a demo account before applying it on the real market. The first strategy, which is perfect for deposit acceleration, is trading on breakout of levels. If you are already familiar with technical analysis, you have probably heard about support and resistance levels. These are the areas where the price often stops, bounces, or, on the contrary, breaks through them and goes into a strong movement. So our task is to catch the moments when the price breaks these levels, because this movement is usually followed by an impulse, which we will use to quickly increase the deposit. In order to use the strategy of breaking the levels, we must first define these levels correctly. If you build them incorrectly, the whole strategy can be ineffective. So let's understand how to find key levels on the chart. Strong levels are those that the price has already tested several times. The more often the price is stopped at the same level, the more significant it is. For example, if the price has bounced several times from the same zone, it means that there is strong resistance or support in that area. And if a breakout does occur, it will be powerful. It is also very important to pay attention to historical extrema, maximum and minimum points of the chart. They often become key levels, as they have been used as the basis for market reversal. For example, if the price on the daily chart has reached a certain mark several times and bounced down, this level can be considered a strong resistance. Psychological levels also work well. They are round numbers such as 1.1000, 1.2000, 150.00, and so on. Many orders are often concentrated at these marks, so the breakout of such levels is accompanied by sharp movements. To find the levels, switch to a higher time frame. Even if you are trading on M5 or M15, first look at the chart on H1 or H4 to see the global levels. This will help you better understand which areas are truly significant and which are just random price fluctuations. Now that we have figured out how to find levels, let's talk about why this strategy is ideal for deposit acceleration. The first and most important thing is a short stop loss. Since breakout trading involves entering on momentum, we can place minimal stop losses behind the nearest level, which allows us to limit our risk even with a small deposit. The second factor is the strong movement after the breakout. When the price breaks through a level, especially if this level is important, traders who are trading on the breakout enter the market en masse, and those who put stop losses behind the level are forced to close their positions. All this leads to a sharp impulse, which can be used in your favor. The third thing is versatility. This strategy works on all markets, be it Forex, cryptocurrency, stock market, or even commodity assets. The breakout principle remains unchanged, and it can be used in different conditions. Thanks to the short stop loss, strong movements after the breakout, and its versatility, this strategy is perfect for acceleration of small deposits. Now, let's look at the specific entry algorithm for this strategy so that you can put it into practice. First, we need to find strong levels. Next, we wait for the price to approach the level. It is important to watch how the market behaves before the breakout. If the price is gradually shrinking, the fluctuations are decreasing, and the candlesticks are getting smaller, it means that the market is preparing for a strong movement. When the breakout has occurred, we enter the trade. There are two options here. Either enter the market immediately after the breakout, or use pending orders, buy stop or sell stop to automatically enter the trade when the price breaks through the level. Be sure to place a stop loss. It is better to place it slightly behind the broken level. The last important point is profit taking. Take profit can be set 4 times higher than the stop loss, or you can fix the profit at the nearest levels where the price can stop. So the breakout of levels allows you to take strong movements with minimal risks, which makes it one of the most effective strategies to quickly increase your deposit. But that's not all. There is another strategy that allows you to accelerate your deposit using a completely different approach. The second strategy that can help you accelerate your deposit is smart money trading. This approach is based on understanding how the market actually moves. Unlike classic technical analysis, which focuses on support and resistance levels or indicators, smart money trading focuses on the actions of the big players, those who really drive the market. In the world of trading, retail traders, in other words, most people, are often victims of manipulation by market makers and large participants. Their goal is to gather liquidity by forcing the crowd to open trades in the wrong direction. As a result, the price may first knock out the retail trader's stop losses and then sharply reverse and go in the opposite direction. A complete smart money strategy requires in-depth study, as it involves many details, understanding liquidity, imbalances, accumulation zones, and market manipulation. However, now we will be interested in only one key setup for entering a trade, which is ideal for deposit acceleration. Why is the smart money strategy good for acceleration? The main reason is that it allows you to trade alongside the big players. Here we look at the mechanics of the market itself and understand where the big players create crowd traps to then move the price in their direction. By trading this strategy, we enter the market only after confirming the actions of the big players, and also after entry, the price often moves impulsively, which allows you to quickly increase your deposit. Now, let's analyze the setup itself, which can be effectively used to increase the deposit. We will trade on the EUR-USD currency pair on the M5 timeframe. The first thing we need to do is to add the sessions indicator to the trading terminal. We are interested in the closing of Tokyo and the opening of the London session, because it is at this moment that there is a sharp inflow of liquidity in the market, which creates strong movements. Next, we highlight the high and low of the Tokyo session on the chart. These are the two key zones where retail traders' liquidity is accumulated, since many of them put stop losses behind these levels. The big players are always chasing this liquidity, so this is where the first moves occur before a major trend is formed. Once the London session opens, we carefully watch which zone has been taken by the big players. If the market withdraws the Tokyo high first, it means that the big players have taken out the buyers' stops and prepared for a decline. In this case, we consider selling. If the market withdraws the Tokyo low, it means that the seller's liquidity is gathered and the price is likely to rise. In this case, we consider buying. After the liquidity withdrawal, we wait for the FVG to appear, which is a gap between candlesticks that remains after a sharp impulse. In smart money trading, this is an important indicator that shows that there is an imbalance in the market and the price is likely to return to this area before continuing the movement. In simple words, FVG is an empty area on the chart, which the price often fills before the next impulse. That is where we will look for the entry point. Now we need to wait for the market structure to change. If the Tokyo high was withdrawn at the beginning of the London session, the structure should change from upward to downward. If the Tokyo low was withdrawn, the structure changes from downward to upward. This change in structure is called CHOCH, change of character. It indicates that the market has indeed changed direction. As soon as the trend has changed, we wait for a pullback to the FVG zone and enter the trade. We place stop loss behind FVG so that it is not knocked out by random movement. Take profit should be placed in the ratio of 1, 2, or 1, 3 so that our trades were mathematically justified. What if you want to make money on the market, but you don't want to sit in front of charts and analyze every trade? In that case, the MiloBot PRO Expert Advisor is the right choice for you. It automatically analyzes the market and opens trades without your intervention. The Expert Advisor trades 12 currency pairs at once, analyzes the market, opens and closes trades strictly according to the strategy. excluding emotions and mistakes that prevent most traders. For the last 4 years of trading, he has increased his deposit from $34,000 to $272,000. And all the results can be checked on independent monitoring textbook. You can purchase the Expert Advisor on the MQL5 website. All links can be found in the description. And remember, trading is not luck, but calculation, control, and correct decisions. If this video is useful, please put a like and subscribe to the channel. There are many more useful materials on trading.